Good afternoon, everyone, and a happy Juneteenth to you. I'm trying to, um, I was trying to start my IG live, but it was acting stupid. It's acting right now. It's acting right now. Don't be the gambler. Tim, what in the world are you talking about? Don't be the gambler. Well, you already know. I don't know what I'm talking about because I get an idea and I just turn on my camera and I start talking. And I start talking. I just got back from the store. You feel me? Shout out my family who got me my new shirt. Get out of the way, microphone. Who got me my new shirt for Father's Day? Big Spider. You hear me? I'm just your friendly neighborhood amazing Spider dad. You feel me? My family hooked me up with the amazing dad shirt. With the amazing dad shirt. You know, my kids and the love of my life got me this shirt. Okay, what's going on, man? Shout out to everybody who pulled up on this happy Juneteenth, right? On this happy Juneteenth. Shout out Rhonda. Shout out Here to Learn and Share. Shout out Erica. Shout out. Is that E-Rock? Is that Erica E-Rock? Is that E-Rock? What's up, Trader Mo, Lil Hawk, Sonia, yeah, Habby, Kareem, Taryn, KC. Shout out to everybody who pulled up in the chat, man. Tim, what you talking about today, Tim? I got something to say. What do I got to say? I got to say, oh, my picture ain't up there no more. Where my picture went? Y'all hold on, man. Where my picture went? I got something to say. And it is, don't be the gambler when it comes to trading and investing. What's him? We already know that much. What are you talking about? Glad you asked that question, little Timmy Rogers. Thought you was Cartman for a minute from South Park. But what I'm talking about is when I say don't be the gambler, right? It all stems back to what we was talking about the other day, having a plan. Well, Tim, you talked about the other night. Talk about having a plan. The plan is what you execute, blah, 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 blah. Shut up. I know I talked about it the other night, but it just don't all boil down to one simple thing. It's a lot of things you got to think about when you're trading and investing. It's no one thing that's just going to make it work. You got to have all these different little pieces of the puzzle, and they got to come together at the right time, and then you execute. Right? So now let's talk about not being the gambler. And it all stems back to the plan, right? The reason why I want to talk about this is because when I first start trading and investing, right, people would say something to me and I would have no clue as to how to actually put it to work practically. You know what? I'm sitting up here looking at this thumbnail that I made. I think I went crazy on this. I be doing my thing. Y'all do not see the details I be putting into this. Y'all do not see the poker chips. Y'all do not see the dice sitting on 7, 7, 11, 7, 11. You know what I'm saying? Y'all do not see the money on the table. Y'all do not see the cards. Y'all don't see the intricate work that I put into this. Shout out my son for because I had my phone on this track. I got this right here for Father's Day too. This little tripod right here. I got this for Father's Day too. I had my phone on that tripod and I had put it on like a 10-second timer and I was gonna take my own picture. And my son walked. I said, son, I'm glad you walked out. Take this picture for me, son. He said, sure, Dad, I'll take it for you. Since you're using the tripod that we bought you for Father's Day, I'll be glad to take it for you. I said, thank you, son. I love you. Now, I just was looking at that as I was talking, and I just wanted to celebrate myself for a minute, right? Now, when I first started trading and investing, right, I had no clue on how to implement stuff that people were saying. Well, somebody on IG, hey, IG, come over here to YouTube. Hang out with us over here. I see somebody said something on there. Happy Father's Day. Happy Father's Day, YouTube. Right? Y'all pull up on YouTube, man. Pull up on YouTube. But right, I had no clue on how to implement stuff, right? People would say, hey, have a plan, right? But I had no clue on how to create a plan. People would say, hey, don't chase price. But I had no clue of what that meant. People would say, hey, don't be a gambler. But I didn't understand what that meant. Like, help me out. So today, I'm going to try to help you out on what I mean when I say don't be a gambler. You ready? Let's go. Let's go over to the charts. Move out the way, handsome Tim Rogers. Let's pull up the charts. Right? I don't have my trading view open. Let's open trading view. While I'm opening trading view, I would like to say, as we're going through this, since y'all took y'all time to pull up and hang out with me today on Juneteenth, if you have any questions when it comes to anything that I've ever shared on how I use or understand the ICT concepts that I trade, feel free to put the question in the chat. And if you feel like your question is too intricate to type, just say, hey, Tim, put the link in there so I can pull up and ask this. And at the end, when I finish sharing what I got to share, I'll answer your question, or I'll pull you up on stage and let you ask the question, and then I'll try to answer your question. Now, let's get into it. Don't be the gambler. Shout out everybody that's a part of the membership. I sent out a chart and my idea for the for the near future, right? Let's take all of this off, and these are weekly candles, right? So what we're about to do now, I'm going to go through and I'm going to look at the chart like I always do. I am going to come up with my thesis like I always do. And then I'm going to show you what I mean when I say, wait a minute, don't be the gambler. All right, let's go through it. Right, lightning speed. So these are weekly candles, right? I'm gonna do it like I really do it. These are monthly candles, right? So monthly candles. I'm looking at the ES, right? This is the current contract. If you're wondering why it's not that many candles here, right? I use the current contract. You can do the same thing on the continuous contract. It don't matter. If we go over to the continuous contract, it don't matter which one you use, right? Right. You see on the continuous contract, I even got something marked down in the continuous contract right there. As you see on the continuous contract, right? This monthly wick right there, we're right at equilibrium of that monthly wick on the continuous contract, right? And then that right there is the closest swing high, right? Come here, line. That right there is the closest swing high right there that we've gotten to, that we still haven't gotten to on the monthly level. So, and then the prices are slightly different from contract to contract. The continuous contract is a little more smoothed out because it's more data to, you know what I'm saying, calculate, as opposed to the current contract. So the numbers are going to be slightly off, but the highs and lows, the targets are the targets, right? Because if you look at that same wick on the current contract, we're a little above consequent encroachment, whereas on the continuous contract, we're right at consequent encroachment of that wick because the price is a little more smoothed out on the continuous contract. A lot more data to, you know what I'm saying, think about. But that's not why we're here. We're here to come up with our idea, right? So see, that's the closest swing high on the monthly. We got this monthly order block right there. We're right there, right around mean threshold that we've pushed through, right? So Let me mark that out. Right. 44, 48, 25, 44, 48, 25. All right. What I said it was. Order block, bearish order block. Don't have a mean threshold. Bearish order block. Mean threshold. This is a monthly candle. All right. Put that there. All right. So on the monthly time frame, my bias is bullish, right? This current and below. This right here is a monthly high. Template. Box top monthly. Box top monthly. I want to see this on the current and below. Right? Meaning I can see it on this time frame and lower. I want to see how that look on the weekly down there. 1 week. All right. So on the weekly. First thing my eyes come to on the weekly is the volume imbalance that we have been talking about before. Right there. That volume imbalance we have been talking about before. That's the first thing that comes to my eye on the weekly, the one that we talked about that we had went all the way almost through. Right. We talked about that once before. Volume imbalance weekly. Right. Right. That's the first thing that pops out at me. We got this small liquidity void up there. I don't feel like marking a whole lot of stuff because I don't want to be on here forever. So I'm just gonna mark like key stuff that sticks out to me. Breaker right there, weekly breaker. Right, weekly bullish breaker right there. That's the close of the bullish breaker. All right. That's the close of the bullish breaker week. All right. This current and below. Okay. So we got the bullish breaker there. We got a weekly order block down here. Let's see. Let's run my Fibonacci tool on this last week run up right here. We're going to use the low from when we left that area. Okay, so when we left that area there, this right here, the reason why I'm using this low over here from when we left, because this low came down here and filled in this imbalance. And then after we did that, we left that area. So I'm just going from here up because all of this right here is a potential balanced price range. So I'm just using the low from when we left up there. And now I see a weekly discount Bessie right there. Weekly discount Bessie right there. On the Bessie. Discount Bessie. Okay. Inside right. I'm going to get to what I'm talking about in a minute. If you don't like it, the door's still in the same place it used to be when I was going live every day. Okay. So we got a weekly Bessie in the discount. Right? And we have, this is an order block right there. A little far from price, so I'm not going to mark that order block. I'm not an order block trader. Only time I mark out order blocks is when they're relevant to price right now, right? But we got a weekly order block way down here. And the reason why I say it's a little bit far from price is because this is the weekly low right there. Right? That's the weekly low right there. Box bottom weekly. Right? That's the weekly low right there. So for me, right, this imbalance for me is important because I trade fair value gaps. So fair value gaps is the first thing that sticks out of my mind. Fair value gaps paired with breakers, right? That's the first thing that sticks out of my mind, right? So when I see an imbalance under price after we have come to a weekly, and this right here, this is a weekly target that we came to. Remember, we hit this SIBI. This was our target last week. We had this SIBI right here. Fair value gap week. weekly, negative fair value gap, weekly, right? So last week we hit this city, right? So we came to a weekly target, right? And then we have a weekly imbalance below it, right? So this is important to me. Also, my eyes are attracted to this right here, right? That's a weekly liquidity void that we went up through, right? We offered buy side, we offered sell side almost to the bottom, and then traded back up out of it. So there's still a little piece that we did not offer sell side to right there, right? I'm keeping that in mind. I don't want all that junk on my chart, so I'm just going to keep it in mind, right? Now, let's put a weekly high on there. Then we're going to go down to the daily, right? Weekly high, box top weekly. Right, let's put this in the middle. Okay, we're going to make this for this level and lower. All right, let's put this in the middle, this level and lower, since we there already. This level and lower, put it in the middle. Right, and on the weekly is looking bullish also. So let's take this right here. Let's get us a box. Get us a box. We're going to put a box right here. So monthly, bullish. Weekly, bullish. Right? This is what I'm seeing from the candles. But Tim, why do you say that? Glad you asked that question, little Timmy Rogers. Nice to see you. Right? If we go to the monthly, right? We took out this high right there and we closed above it, right? We did not reject that high. So if we don't reject the high, right, the market is telling me there's a high probability of continuing to reach up on the high on that time frame. It doesn't have to go immediately. It's just saying, hey, I want to continue up, right? Right? On the weekly, we got above this high and we closed above that high. So now, is the market targeting this high? Is it targeting that high? I don't know. These are just more highs above us that it's reaching toward. So that's why I say the monthly looks bullish, the weekly looks bullish, right? Now, let's go down to the daily. One dia. Get out of here. What are you doing over there? One day. Okay, so now we're on the daily, right? We're on the daily chart. Come here, box. Put you over here. Okay, so now on the daily, dia. On the dia, right? So now on the daily. Okay, so we got mean threshold of that monthly order block right there. During this half of day of trading, over last night, we came back down and almost filled in this imbalance right here. Right, we came down and just about filled in that imbalance during this little half a day of trading right there. Right, we just about filled that in. Then coming from the same place there, the same coming from this low right here to that high right here, we have a discount BISI right there on the daily, right there at that breaker close. All right, so daily inside to the right. Okay, this time frame in lower. All right. So, Tim, how do you pick which PD arrays you're going to pay attention to? Right. I look at discounts and premiums. Discounts and premiums. Right. So this is my premium PD array up here, this weekly volume and balance. This is my premium PD array up here, that monthly, what's the name? And remember, there's another weekly liquidity void up here at the top. So those are my premium PD arrays, right? And these are my discount PD arrays, right? Here's price. We've come back into this one here, right? We got wait a minute. Was that bearish bullet? Yes. That was bearish, yes. So we're above mean threshold of that bearish mid order block on the monthly, right? We're above mean threshold of that bearish order block on the monthly, right? So this being above this mean threshold of this bearish order block, that also contributes to my monthly bias of being bullish, because if we have a premium bearish PD array and we exceed the mean threshold of it, like we did here, where we closed above that mean threshold. What's up, baby? My sweetie up in here. What's going on? Right? Then this is like being disrespected. So I have lost faith in that of keeping price down because we're above the mean threshold, right? So and then we have what is this? Oh yeah, that's that weekly SIBI that we priced up to. We got up to it and then we closed back inside, right? On the daily, we closed back inside that weekly SIBI, right? We closed inside that weekly SIBI, and then we closed back inside it again. So we're starting to pull back. So on the daily, right? These are daily candles. On the daily, right? On the daily, it's looking bearish, right? The daily is looking bearish, right? Why is the daily looking bearish? Because I just said it. We came to a weekly SIBI that we traded up and through, and then the bodies of the candle respected it, closed inside of it. Again, we came up and then took out buy side, rejected off of the buy side, right? The bodies of this candle respecting that SIBI, right? So now we've come down to this daily SIBI right here, and we've almost repriced all of that. Let's get this together. Fair value gap daily. Let's go inside to the right. I'm going to get to the gambler. This is it takes stuff. Stop being impatient. This is free. Hey, so this interval and below. All right. So, all right. So now we've come back down to this SIBI right here. Now we came all the way up to here and rejected, right? Since we came all the way up here and then rejected, right? Now, and we're respecting this PD array. So on the daily time frame, I'm bearish, right? What is my target for the daily price? We already saw the target for the monthly up here. We saw a couple targets for the weekly. Remember I said this high, that high. Those were targets. If you didn't catch that when I said, is it this high, is that high? Let me go back to the weekly for the people who missed it. Right? When I said, hey, we closed above this high over here. So are we going for this high? Are we going for that high? There's two targets on the weekly, that high right there, that high right there. I'm not saying the level. If you want to know the level, pull up your own chart and look at it. Okay, so now let's go back to the daily. Right. So now, since we came up and we're rejecting, once we got to this PD array right here, and it's giving us bearish field because we're respecting, right? We're respecting the body of this. Got long wicks here, right? Now, what is the draw for the bearish, right? We go to the low that sent us to this high, right? So the low that sent us to this high is this low down here, right? That low right there, the same low that we used to measure the move, right? Right? So the low is down here. That's the bearish draw. The low is right there, right? Let's get us another text. Let's get us another text, right? Bearish draw. Oh, this is good. Oh, this is good. Oh, this is good. I should have charged admission. You know what? You know what Michael was saying on the other video? I should have charged admission. Right? So, bearish draw. Right? So now we got that. We got that right there. Now, what do we have in between the bearish draw? Right? Because the draw, you want to have a pool of liquidity as your draw. Where does the liquidity lie? Above highs and below lows, right? Oh, I ain't turning on my fancy dancy. I supposed to have my fancy dancy on. Y'all got me slipping, right? Liquidity lies below lows and above highs. So whenever you get your draw, you want there to be a draw on liquidity, right? So this is my draw. Now, what's in between price and the draw, right? Let's go see, right? So we have this one SIBI that we've traded down into and have not completely repriced yet. Let's put a quad on here, not Quad City DJs, but let's put a quad on here and break it down into quads and see what did we do. Quads. So on this daily SIBI, I mean, yes, that should be a busy. Y'all got me slipping. Y'all got me marking stuff wrong. That right there is a busy. Y'all got me marking stuff wrong. Fair value gap, bullish daily. How y'all got me out here marking stuff wrong? All in front of folk on Al Gore's internet. Come on, man. Come on, man. All right. Inside, boom. Okay, now we got it right. So the busy. So we've come down almost to 3/4. And then we rejected back up and closed above 1/4. So right now, this busy, right, is doing a very good job at supporting price, which it's supposed to do, right? So when the market rejected here and gave that bearish look, this busy is supposed to support price. Why do I say it's doing a good job right now? Because it came down below gas clean encroachment and then it rejected back up and closed right around the quarter. So anytime something's supposed to support price or reject price, you don't want it to just run over gas clean encroachment or mean threshold, right, without a struggle, right? You want it to, like, you want consequent encroachment or mean threshold to just fight for its life. And that's what this is doing now. So it's doing a very good job at its job. Okay, so now we have that. And then the next thing we have in between price and the low, we have consequent encroachment of this wick right here, right? We have consequent encroachment of this wick right here. Then we have this busy right there, right? And then we have this order block right here, right? That's everything that we have in between current price and the bearish draw, right? Everything we have between current price and the bearish draw. Where's my thing? Bearish order block daily. Hey, why are you not extended to the right? Okay. All right. Okay. So now that we have everything marked out that we want to watch and we have our higher time frame biases, right? Now it's time to get into not being the gambler. Okay, now that we got everything mapped out, because in order to trade, you have to have a plan. In order to have a plan, you have to have planned, right? And now, this is where it comes into your time horizon, right? This is where it comes into your time horizon, right? So, for your time horizon, you want to, if you like taking notes, this is your note time. Don't ask me to repeat because I speak extemporaneously and I might not remember. So, for your time horizon, right, you want to have an entry point, right? You want to have an exit point, right? And you want to have a broken thesis point, all right? So, out of those three, the one you want to pay the most attention to is your broken thesis point. Why do you want to pay the most attention to your broken thesis point, right? Because if it hits your broken thesis point first, abandon ship. If it hits your broken thesis point first, abandon ship, right? Now, the reason why I say abandon ship, because if it hits your broken thesis point first, you miss something, right? You miss something. So if it hits your broken thesis point first, abandon ship, regroup, replan. That right there is the first step and not being a gambler. Now, let's go in and figure out some broken thesis points for day trading and swing trading. Let's do swing trading first, right? So swing trading first, we're on the daily time frame, right? So for swing trading, we're going to be going along with the weekly and the monthly bias because we're swing trading, right? We're swing trading. We don't want to swing trade in accordance to the daily bias, right? We want to day trade in accordance to the daily bias, right? And remember what I said, bias is she a little loose. She a little hussy. She can flip-flop on you. So, but we want to swing trade in accordance to the weekly and the monthly bias. So what's the weekly and monthly bias, everyone? It's bullish. Okay. So for the bullish monthly and weekly bias, you pick a time frame. You're buying the time. Who cares? So for a monthly and a weekly bias of being bullish, right? Our entry is going to be this weekly fair value gap down here, right? This is our entry. Why is that entry? This is little Timmy Rogers. This is little Timmy Rogers entry point. Why is that the entry point right there for little Timmy Rogers, right? Right. So if you come back up to the weekly, if you look right over, remember this breaker that we marked out on the weekly? Remember that breaker we marked out on the weekly? Highlight that breaker right there. Right. We got an imbalance right here, right there, in line with this breaker right there. So that's my entry right there. That's my entry, right? That's my entry. Your entry could be the order block. Your entry could be whatever you want. But as long as your entry is in the discount, because the monthly and weekly bias is bullish. you always want to buy in a discount, sell in a premium. That's my entry point, right? The target, weekly, shaving there, closing there, right? We're putting our plan together. Entry, shave, close. So entry and targets. There's your entries and your targets, right? Thesis broke. Thesis broke. That low right there. That low right there. That's the thesis broke level for the swing trading, right? Tim, that's a whole lot of risk. You're swing trading. You're playing daily. You're playing weekly candles, right? You're playing weekly candles. If you want less risk, you come into the daily, right? Thesis broke can be that low right there, right? Why that low right there? Because that low is the parent of that high, right? That low is the parent of that high. A rejection up there takes us all the way back to Big Mama, right? This piece of the puzzle right here, this is on the daily levels where we consolidated here and then took off there and went up, right? But on the higher time frame, this low right here is the parent for that high. So rejecting up here, then your draw would be all the way down there on the higher time frame. So if you want to come in and get a little bit better risk to reward, use a lower time frame. That low right there can be your broken thesis area right there. Now, let's get back to not being the gambler. Okay, what stops us from being the gambler, right? What makes us a gambler, right? If you're on this live right now and you hear me say, hey, my monthly bias is bullish, my weekly bias is bullish, my daily bias is bearish. And then you be like, hey, I'm a swing trader. Tim says he's bullish. I'm going to go and buy calls tomorrow. You're gambling, right? You're gambling. If you buy enough time, hey, it may work out for you. But guess what? You may have to suffer through some drawdown. Because anyone who knows anything about price action, when you're up here in a premium like this right here, and you've been running like a big dog, the market at any time can take a break on you. It can pull back. It can consolidate. And we expect for price when it gets to like weekly targets, we expect it to cool off by either consolidating or pulling back, right? But if you just jump in because your favorite trader said something, you're gambling, right? Now, I'm pretty sure there's nobody on this channel right now who's going to do that. We all have learned our lesson. We all have learned our lesson by just going out and buying what is it? AMD calls for 2023. Hey, y'all know I ain't taking no shots at nobody. I'm cool with everybody. But we all got to take accountability. We all have jumped out the window and bought something just because somebody said so. Right? Now, when we got our plan and we got everything in place, right? ARC, that's it. Buy ARC calls for 2023. ARC, when we bought ARC 200 calls for 2023. Hey, I ain't taking no shots at nobody. I got love for everybody. Me and Mark cool. I don't know Jolene, but me and Mark cool. I ain't taking no shots at Mark. I'm taking shots at myself. I bought stuff in the past just because somebody said so. And ARC and AMD happened. No, I didn't buy ARC. Oh no, I did buy ARC, but I got out of ARC. I made money of ARC, but AMD slapped me from here to Nantucket. I ain't gonna hold you. You better not be holding some AMD. Hey man, y'all stop interrupting me. Now, what was I saying? You got your plan together, right? I can't remember where I was at. But anyway, you got your plan together, right? And let's just say this is the entry. This is what we talked about. This is your entry, right? Now, let's say price can't. I ain't gonna go there. I'm gonna go here. I'm gonna do this. Y'all remember the other day when we talked about y'all remember the other day when we talked about this here? Let me find it. We was talking about my swing trade idea back in April, right? Right, when we talked about this right here. Right? Remember we talked about that. Now, if we look at, let me hide all of this right here. Right? Because we talking about gambling. And remember, I tell you, all this stuff is all of it is related. Everything's related. Okay. So possible entry, that's this BISI right here. All right. Possible entry, that's that BISI right there. Right. I want to use it on real data. I don't want to like say, hey, let's pretend. We're going to use it on real data so we can understand correctly what we're talking about, right? Right. Preferred entry, that's that BISI right there. Right. Now, we said this right here was a possible entry because this BISI right here met all the criteria for my personal entry, right? We attacked sell side, right? Made a ping out toward the draw, created a breaker right here, right? We created a breaker right here. That's the breaker, right? And we got an imbalance right there after leaving this unbalanced price range aligned with the breaker, right? We're aligned with the breaker right there. Now, if you're wondering why this is not the possible entry, right? Come here, right there. This fair value gap is below mean threshold, right? So if this includes everything that supports my thesis, I don't even want to see it make it to mean threshold of this breaker. That's why this one is not the possible entry. This is just the preferred entry because it'll give me it'll alleviate any downside gap risk below price right there. But this is the entry. So now back to not gambling, right? So price went up and price started to pull back here, right? Price started pulling back. It came into this BISI right here, right? Price came into this BISI right here, right? Where did I say the possible entry was? I did not say this BISI. I said that BISI. So when price comes to this BISI right here and price starts to leave, right? You are not going to chase and you are not going to be the gambler. Why are you not going to be the gambler? Because you have a plan. Remember, we talked about this. You have a plan. What does your plan say? Your plan says this is your possible entry. It didn't say that was your possible entry. Now, remember what I said when I said, if you just go out and just do it, you may get lucky enough, right, to be successful. But what did you have? If you got in here, what did you have to suffer through? This drawdown. Oh, I'm happy again. This drawdown. Oh, should I hold on? Should I let it go? Should I? You're panicking, right? You're panicking because you didn't have a plan and you jumped in here and you don't understand why price came back here. You don't understand why price came back again. You don't. It's like you don't know why. You're gambling, right? You are being the gambler, right? So to avoid being the gambler, right, you have a plan. And now that you have your plan, you're not going to gamble. You're not going to be the gambler because you don't want to have anxiety. You don't want to be wondering what's going on. You want to know what's going on, right? Now, you're waiting, you're waiting, you're waiting. Now it comes back to your area, right? Now, if you decide I want to go all in when it hits it and just absorb any downside risk, that's up to you. You go all in, you go in a quarter, you go in 50%, whatever you want to do, that's up to you because now it's according to your plan. You're not gambling, right? And then price starts to move up. I'm happy, I'm happy, I'm happy, right? When you get to that high right there, you already know whenever you break a high, right? There's a chance of a pullback, chance of a reversal, chance of anything. So when you break a high right there, you want to take something off. Personally, during this actual trade, I closed my position right there. Why? Because it had hit the percentage that had exceeded the percentage that I wanted. So I closed it. Right? I'm good. But if you didn't close, that would be a point to shave. Why? Because you're breaking a high, right? And then just say you said, no, I'm not going to shave, right? I'm not going to shave. Soon as you see this rejection of that high right there, what are you anticipating now? You're anticipating on this daily time frame that it's bearish now, and the draw is going to be this low. Why? Because that low sent us to this high that broke that high, and we rejected that high. So now you're not afraid when price starts to come back down because you're not gambling. You know price is potentially going to come back down for that low, right? And since price, you think price is you know price is going to come back to that low, right? You're anticipating it to come to that low, right? So you can either put on more or you can say, hey, I'm going to put on more down here if it gets down to the initial downside risk that I got. You're not gambling anymore. So when price comes down and it takes out the low, right? Right? It takes out the low. So in this, all this right here is daily stuff. Your weekly bias before is that you don't even want to see price get here. So you can either put on some more right there if you want to, and then give it to this low down here. You still have to account for it because that's the original weekly. That was the preferred entry, right? Even though you don't want to see it hit it, that's why you're putting on a little bit up here, but you still have to give it to there. So you're not gambling. And then now you also understand when price left the first time, it left some of this BISI open that it didn't take care of. So now that we come back down and we go into that BISI again and reject up off of it, right? Reject up off of it on the very next day, we open up right there. Like when we came down and we reject up off of it, pretty much respecting the top of it, that right there, since you understand how to read price, is giving you a clue that, hey, this weekly area down here is still in full effect because we came down, we broke this low right here, boop, and we rejected off of it. So when you take out liquidity and you reject it, what's the draw? The high that took you there. So now when you came here and rejected, now the draw is the high that took you there, and you understand, hey, my higher term thesis is still in full effect. We have not, I'm in the trade, and we still haven't gotten down to my break thesis area yet. The thesis is still in full effect, right? So you're not sweating any of this because you never gambled, right? You didn't gamble, right? You could have shaved some more there. You didn't gamble. And look at it go. Look at it go. to go. Right? That right there is just a real life example of like how not to gamble once you get into the trade. I didn't want to sit there and pretend and be like, hey, we're going to pretend it does this. We're going to pretend. We just went back and used the real example, the same example we used the last time. Now, so that is how, that's pretty much it, man. I don't know. That's pretty much it. That's pretty much it. Y'all get the gist of it, man. We done been on here for 50 minutes. It's almost time to go to the gym. So y'all get the gist of it, man. Y'all get the gist of it. Now, so you just apply the same thing to your day trading, right? Just do it on lower time frames. Now that you're in day trading, you come down, you say, hey, we rejected here, and we started pulling back, right? We seem to be respecting this fair value gap, right? We're respecting this fair value gap. What do we have to the upside? What do we have to the downside? Right? To the downside, we know we got consequent encroachment there. To the upside, we know we got consequent encroachment there of that wick right there. We're looking at this right here. This wick came up to be consequent encroachment of that. So right now, we're not anticipating price to go back above that consequent encroachment. Why? Because this wick is higher than that consequent encroachment, and we breaking down. So we don't anticipate price going back above this, right? So for a bearish 1 or 2 day thesis, what can be your broke thesis thing? A closure above this consequent encroachment, a closure above this high that can break your bearish thesis in like a 1 or 2 day time frame, right? Hey, if it gets back up here and close above this consequent encroachment, it's broken, right? If it get back above this high, it's broken. You know what I'm saying? And then, you know, long as it respects that, what can be targets? These consequent encroachments, this imbalance. I like to go for the imbalance as my ultimate target, but the consequent encroachment, it can reverse stuff and make you, take unnecessary drawdown, unnecessary. You know what I'm saying? You do the whole puckering up unnecessarily, so you can use this as targets. But I like to focus on imbalances because I believe the market seeks balance and liquidity, right? So if it's coming down, it's seeking balance. Boom. Hit that balance. If it get down to this order block and reverse, I'm happy with that. It can come back and get this at another time. If it comes down, blow through that order block and hits this imbalance down here, I'm happy with that. I don't care. I let price tell me what they want to do. But I hope somebody got something out of this, man. I said I was only going to record videos when I had something to say. We're sprinting now. I'm beyond all of the teaching stuff. If you want to be taught, go to ICT page. ICT page, he teach everything. If you want to learn stuff the way I understand it, go to my playlist. Look at the ICT concepts, explain playlist. That's the whole teaching stuff. I ain't doing no more lives, teaching nothing. On time I get on here is if I got something to say that's going to help traders and investors. And hopefully this helps somebody. Let me go see if there's anything to the chat and we're going to call it. I just placed my order. All right, buzz, man. AMD paid you well. Congratulations. AMD broke my heart. They didn't like Woods hanging out with the blood. Happy Juneteenth, everybody. Happy Juneteenth. Happy Juneteenth, everybody. Sorry about that, y'all. When price breaks, let me read that again. When price breaks the swing low or high that started the range, swept and old low. Hold on. When price breaks the swing low or high that started the range, which swept an old low or high, does that indicate a market structure shift? Yes. If I'm understanding you right, then yes. Right. So If I'm understanding you correctly, right? Let's say this low right here took us up here, right? Then if price comes back down and breaks that low, this right here becomes a breaking market structure. No, wrong freaking thing, Tim. This right here becomes a breaking market structure. If I'm understanding you correctly. Right there. So, and see, this is what I whenever y'all hear me talk about a shift in sentiment versus a break in market structure, right? This is what I be talking about, right? So, if you see here, this low sent us up there, right? We was all gas right here. This we was all gas, all green candles, right? But right here, this candle pulled back down very close to that one there, right? We almost made a swing low right there, right? We almost made a swing low right there, right? We rejected off of this imbalance. We came down close to this imbalance and we rejected off of it right there. So it was very close to a swing low. Let's say if it was a swing low right there, right? Breaking that for me would be a shift in sentiment, right? It wouldn't be, I wouldn't be ready to go short yet off of breaking this. If we came here, broke that, and then started going back up, I wouldn't be looking for an imbalance in here too short, right? I wouldn't be looking for an imbalance in here too short. It could very well give you an imbalance here too short back down, right? But I wouldn't be looking for the short until here, right there. I'll be looking for the short here at the breaking market structure at the breaker, right? This right here, breaking a low here would just be a shift in sentiment for me right there. Because it's like this is the low that took out the high. Hopefully that made sense. And if I was understanding you right, then the answer to your question was yes. I just be going farther than I need to go. Hopefully I answered it right. Thanks, Tim. I missed the April run, but I'm not missing this one. That's what's up. That's what's up. Set them alerts are your best friend. Alerts are your best friend. Thank you. You're welcome. Hey, Mikhail, you got a mean little beard there, boy. I like, hey, drip too hard, don't stand too close. You're going to drown off this wave. That boy clean as the board of health, boy. I like that. Window pane suits ain't really my thing. I don't like them on me, but I like how other men look in them. You know what I'm saying? And you're doing your thing there. Happy Juneteenth, my guy. Price for up and breaks a high when it comes back and breaks the low that started the move. Is that a market structure shift? That ain't the same thing you just asked, Marcia. That's the same thing you asked, right? Okay, I got you. Okay, I got you. It's 2023. We read typo. Don't feel bad. We read typo. On the 4 hour, there is a bearish breaker. Okay, one spoke. I appreciate you, Sonya. Look at Sonya that came through. Sonya, but hey, remember when I told you Sonya was making them eat cake? Remember I tell you about Sonya had the pretty smile, the second most beautiful smile in the spider game next to that beautiful young lady back there in the corner. I went right back over here. That's the most beautiful smile y'all ever gonna see in your life. But remember, when Sonya flipped the script on him. She done put on the Mary J. Blige hater block. I got my hater blockers on. My hater blockers on. Got my hater block. She got the hater blockers on. Got the hair wet and wavy. Hear me. You better make them eat cake, Sonya. You better make them eat cake. Hey, I appreciate you, Wells Rock, Wells J Rock. I ain't never seen her name before. If this is first time hanging out with us, welcome. If it's not the first time, I jolly pies. I just don't remember that name. That's all we got. I've been on here for an hour. Thank you to everybody. Yes, here to learn and share. Thank you and happy Juneteenth to everybody. We're gonna call it there. Next time I have something to say or something to share, I'll send out the Spidey signal. Shout out my family for getting me this amazing. Hold on. Shout out my family for getting me this amazing shirt. You know what I'm saying? The amazing Spider Dad, Big Spider. Y'all hear me? Hey man, if you like what you if you got anything out of this, share it with somebody, man. Share it with somebody. You don't think that you are a teacher, but you are. Thank you. I appreciate that. Michelle, if you got something out of this right here, share it with somebody, man, because if you got something out of it, somebody else gonna get something out of it. And all we trying to do is build a new Wakanda together. You feel me? Hey man, I'm gonna get off here. I appreciate it, man. Y'all know I run my mouth forever. I enjoy hanging out with y'all. I enjoy hanging out with the Spider Gang. I appreciate y'all for hanging out with me. Everybody that's still part of the membership, I will continue to share my thoughts via charts and sometimes via video, because I appreciate y'all for supporting the channel in a financial way. You do not have to feel obligated to go out there and jump into the membership, because like I say, I'm not turning it off because I'm not going to block my blessing. But as long as there are people there, I will do something to try to share some type of value for you. And with that being said, Big Spider, gone.